Have you guys ever deviated from your trading plan because you saw that emotions are telling you to do something different than what your plan is? In this video, I tell you solutions how to keep emotions out of trading. What's going on, guys? This is Chris from Stock Hours, and today's video is all about how to keep emotions out of trading and out of the stock market. So it's super important to not be trading with emotions, because once you start basically following your emotions, or if you're trading too heavy, you might hold a losing trade way too long, hoping that it comes back, breaking your trading plan. You might start trading setups that aren't truly there just because you want to make back money or just make more money, hold past a profit target or something like that. So that's the easiest way to not be consistent over the longer period of time. If you don't have a plan, if you don't have setups that you know work for you, then it's going to be very hard to be consistently profitable because what you're doing is not consistent. Keeping emotions out of trading and out of the stock market are the number one way to stick to consistency and know that you're executing to the best of your potential. Just imagine if one day, just one day, you're trading on tilt. So, you hold a losing trade way too long, you go back into another trade as a revenge trade, hold that one too long, you're sized in too heavy on the second trade. That's why keeping emotions out of trading is so important, because it just takes one day that you mess up, you're trading on tilt, trading with emotions, that you give up a whole month's worth of profits, and you have to work back up from there. So this is why it's so important to keep emotions out of trading while you're in front of the screens. So here are some things that you can do to make sure that you're not going to be emotional while you're trading. The first thing is to have other sources of income. When you have other sources of income, it takes away the need to make money every single day and to be green at the end of every trading day. So it's much more acceptable when you have other sources of income to have cash days or even small red days. This way, you can trade to your setups, and if your setup isn't there, then you don't take the trade. The next thing you can do to make sure you're not emotional while you're trading is to have a back tested strategy. This way, you look at the market in a more statistical approach, not just trading what you feel is going to go up or you feel is going to go down. You look at setups, you see the statistics, you see how they play out, what their risk to reward on that setup is, and you trade based off of that. This also gives you way more confidence in your setups, so when you take the trade, you can just let it play out and execute how you're supposed to. The next thing that's super important to make sure you're not too emotional while you're trading is appropriate sizing. If you're sized in way too heavy, it's easy to be very emotional when you're trading because there's going to be huge swings of dollar amount while you're in a trade. So let's say normally you're used to being up or down $100, and one day you randomly go in with $5,000-6,000. You can easily make or lose over $500 in a couple seconds, especially trading options. So appropriate sizing is going to be a very easy way to keep emotions out of trading, so you can just focus on the execution and over the long term be consistent just because you're executing the right way. Yes, you can get lucky when you size up one day, but if you're not and it goes against you, are you willing to accept that loss, that $500, $600 loss? If not, you might hold that trade too long, and now that $500 loss turns to $1,000 loss, and now you might have just gave away all month's worth of profits. By having an appropriate position sizing, you're not going to be too overwhelmed with the dollar amount swings throughout the trade, and you can really just let it play out. And to go back with the last 2 points I made about having a back tested strategy and having appropriate sizing, is having a established risk management system. This could mean that you're only going to take trades with a 2-to-1 or 3-to-1 reward to risk or higher. This way, over the long term, if you take a red trade, you can always make it back. If you don't have an established risk management system, you might be risking more than you're making on certain trades, and those setups you shouldn't be taking. You should be just staying away entirely. This is good when you have a longer term view of day trading. So you're willing to accept losses on certain days because when the trade hits, you're going to make it back, and you might even make back three of those losses, for example. This also helps you limit your overall risk. So if you're risking $100 to make $300, you can call it at the end of the day if you're ever down, 250, something like that, because you know you can always make that money back. And then you can come back the next day and then see if a setup is there for you. This way, if it's green, then you made all that profit or all those losses back. This next point was the biggest one for me in my development as a trader, but it's having a pre-market plan. This is the easiest way to know you're not revenge trading, know you're not trading on tilt, because if you have a pre-market plan and your trades deviate from that plan, then you know automatically you're trading levels that you weren't looking at before. So it doesn't always mean that intraday setups are bad, but if you don't have the time to plan it out, then you're probably rushing into the trade. And if you're rushing into the trade, there's a good chance that you're just trading it off of emotions, not off of technicals. So these are some of the top ways to keep emotions out of trading so you can be consistent over the longer period of time. Hopefully you guys liked the video, and if you do, make sure you leave a like and a comment down below. See you guys soon. Peace.